Hi everyone, welcome to today's webinar brought to you by IC Markets. Today we're going to have the live analysis session. I trust you've all had a great weekend, spending some quality time with family and friends, as well as recharging yourselves for a brand new trading week. Right, before we begin today's webinar, please take note of the disclaimer. Right, this is marketing communication. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs, as it carries a high level of risk to your capital, and you should only trade with money you can afford to lose. My name is Ketan Rameshchandra, and this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years 2019, 2020, and 2021. Right. Before we dive into the chart and trading view, let's take a quick look at what's up on the economic calendar for this week. There's quite a few things going on, right? It's a pretty packed calendar. We've got two central bank announcements, as well as a host of labor market inflation data from Australia, Canada, the UK, and we also have the flash PMI reports right at the end of the week. Right, so very busy calendar. Right, hi Ajay, good to see you as well. Right, so here's the calendar for this week, right? And the time stated here is in GMT time. So up first, tomorrow, Tuesday, 18th of February, the RBA, right, which is the Reserve Bank of Australia, will release its monetary policy statement at 3:30 a.m. GMT time, where they're expected to move ahead with their first rate cut of 25 basis points. They're looking to make a 25 basis points reduction to bring the cash rate down from 4.35% down to 4.1%. Take note, uh, the RBA is one of the last few central banks to begin cutting, and this would mark its first rate cut since they paused hiking rates earlier last year. Right, so the statement is going to be released at 3:30 a.m. GMT time, followed by the press conference by Governor Michelle Bullock at 4:30 a.m. GMT. Now, it is widely expected that they will move ahead with the first rate cut. However, what is going to be more important would be how the statement is worded and what sort of outlook does Governor Bullock communicate in her press conference, right? Because we all know, right, this is pretty much going to be priced in already, right? The 25 basis point reduction is pretty much already priced in. It is now a matter of how dovish the statement is going to sound and whether that is going to be reinforced by the press conference by Governor Michelle Bullock. If she comes out to be relatively neutral, right, we could perhaps see any pullback in the Aussie to be short-lived, and we could actually see this currency pair actually climb higher following the statement release as well as following the press conference. Right, that in between, sandwich in between uh, the RBA and the RBNZ, we also have the labor market or labor force report out of the UK that's going to be released at 7 a.m. GMT time, where we'll get a look into the claimant count change, average earnings, as well as the unemployment rate. Uh, and then later on that day itself, Tuesday, 18th of February at 1:30 p.m. GMT time, we have inflation data out of Canada, right? And then we also have President Donald Trump speaking later on, and the day is not fixed as to when his speech is going to commence, but do watch out for this event as well. And then on Wednesday, 19th of February, the RBNZ is looking to make a pretty large reduction, right? Looking to cut 50 basis points in its official cash rate to bring it down to 3.75%, and then followed by Governor Adrian Orr's press conference. Similarly to the RBA, right? What's going to be equally important or more important is what is actually worded in the statement and how Governor Adrian Orr is going to communicate, project his outlook for future monetary policy action, right? Very dovish language is naturally going to cause the Kiwi to pull back even further. However, if they project a very neutral or balanced outlook, right, we could actually see the Kiwi climb higher after initially dropping uh, when the announcement is made. Remember, this is very likely, just like the RBNZ, just like the RBA is very likely to cut rates, right? It's pretty much been priced in already, right? What is going to be key is how the respective statements are being worded and how each governor is going to convey their outlook on future monetary policy action. And then later on that day, we also have inflation data out of the UK, that's at 7 a.m. GMT time. And then later on, in the latter part of Wednesday, at 7 p.m. GMT, the minutes from the FOMC meeting that took place in January will be released as well. And then on Thursday, we have labor market data out of Australia. And then finally, on Friday, we have retail sales out of the UK, out of Canada. And we have flash PMI reports for the manufacturing and services sector for France, Germany, the wider EU area, for the UK, and for the US as well. So you can see here it's an extremely packed calendar with a variety of macroeconomic data being released, ranging from inflation, employment, to central bank announcements. All right, with that, now let's dive into the charts and trading view and begin the analysis on the dollar index. Right, and of course, if you have, we'll work our way through some of the major currency pairs since we got the RBA and RBNZ releasing their respective statements this week. We'll take a look at the Aussie and Kiwi. We'll touch on the commodities such as gold and oil, and the indices, and of course any other instruments that you would like to see as well. So if you have any requests, do drop them in the chat box as early as possible. Right, okay, so starting with the dollar index, we can see demand for the dollar has faltered quite significantly, right? If you look at it on a weekly basis. Right, hi Ajay, yep, we'll definitely cover Aussie, dollar CAD, and we can cover crude oil as well, XTI USD, and then we'll take a look at dollar franc as well. All right, great to see all the requests coming in. Right, okay, so you can see on a weekly basis, right, after making this high of 110.20 in mid-January, right, the dollar index has trended lower, and we can see over the last 2 weeks, right, the first half of February, the index has dropped, has continued to slide lower. We can see that it has dropped more than 1.5% over the last couple of weeks, right, and today as well, it looks to be under pressure, but it looks to have stabilized today at around 106.73. But I think any retracement to the upside, right? Any retracement to the upside for the dollar index is likely to run into resistance. Now, when I look at the level at 107.51, I see a nice overlap, right? This level previously functioned as a swing high resistance back in November of 2024. Then we see support being formed here on 20th of December. We see support here as well at the end of Jan, right? This part here not the cleanest level, but generally you can still see support. And of course, we can see support here on 5th of February and also here on 30th of Jan. So pretty decent overlap level, which I'm going to identify as a pivot. Right, so it's basically an overlap resistance or any retracement to the upside. For the dollar index towards this overlap, we can expect it to probably stall around this level here. Now on this downtrend, we can also run a Fibonacci retracement starting from this swing high on 12th of February, going down to the swing low of Friday, 14th of February, and when I look at the 50% retracement, and we can see it aligns very well with the overlap resistance, which is the pivot. Now, higher up, right, I see another overlap at 108.82, pretty decent overlap here, and we see some support being formed in mid-January, and then we see resistance in early February, so creating a pretty decent overlap as well. So and at the same time, do take note of this descending trend line. This descending trend line has been in place since mid-January, right? And you can see here it's been respected quite well, right? Apart from this candle here, this wick here on Monday, 3rd of February, where it just spikes significantly higher. But we can see generally that this descending trend line is it's a good idea to keep a close eye on this descending trend line as well. Now, in terms of support, right, there's a nice overlap at 105.46. Once again, this level previously functioned as resistance in the first week of November. Then we can see a nice double bottom being formed, right? We see the first support swing low being formed on 29th of November, and the second being formed on 6th of December. Right, hi Jamilu, good to see you as well. Right, hi Rakesh, great. Thanks everyone for tuning in. Alright, so we can see this overlap at 105.46 is pretty significant as well. Yes, Rakesh, yeah, we'll definitely get to gold as well. Right, we'll touch on dollar index work our way through some of the major currency pairs. Then we'll move on over to the commodities. All right, thanks, Rakesh. All right, thanks so much for the kind words. All right, okay, so we can see here. Uh, Actually, by now, is there a bearish channel that we can identify? Let's see. Let me see if we can identify a bearish channel. Okay, maybe not just yet, but one is probably being formed. Could be formed eventually. So yeah, so I'll just maybe highlight this channel as well. Right, so take note, we can see a couple of touches to the upside and a couple of touches here on the downside as well. Right, not the strongest bearish channel just yet, but I think it's something to keep an eye out as well. All right, so these are the key levels for the dollar index on a daily time frame. Right, take note, it's currently trading around 106.87. Any retracement to the upside, I feel, is likely to run into resistance. So that's why the pivot has been identified at 107.51 is an overlap resistance that's accompanied by a Fibonacci retracement at 50%. Higher up, first resistance is another overlap at 108.82, and take note, it's also continuing to trade within this bearish channel. And first support is another overlap at 105.46, which is also accompanied by Fibonacci retracement at 50%. Now, this 50% retracement was found, starting from, I need two retracements here. Two retracements. Okay, this 50% retracement was found starting from this swing low on 27th of September, going up to the swing high on the 13th of January, and we can see that the 50% retracement sits just underneath the overlap support. Right, okay, so let's move on over to Aussie and Kiwi, right? Since we've got two central bank announcements, right? The RBA and the RBNZ. Now for the Aussie, let's start with the Aussie, right? It was trading in a prolonged downtrend, right? Since 3rd of October, and it continues to trade. It was trading underneath the red Ichimoku cloud previously, highlighting its ongoing bearish momentum. Now this currency pair was also previously trading in a pretty decent bearish channel, right? We see a nice bearish channel from the end of September till mid-January, and then we see a bullish breakout take place through the upper trend line of the bearish channel, and then as price moved higher, right, the momentum pushed price higher, but then it reversed. But we can see that it managed to find support just above or around the upper trend line of the prior bearish channel here. So once the breakout takes place, right, when the breakout like this takes place, take note of the upper trend line of the channel, because typically should price reverse towards this level, it can usually find support, and if it does hold above the upper trend line of the prior bearish channel, it's quite likely we're going to see this instrument, in this case the Aussie, reverse to climb higher. So basically this bearish channel is now actually more, we're just going to use the upper trend line of the bearish channel and identify it as a potential support line here. Now, not only has it broken above this the upper trend line of the prior bearish channel, right? It's also broken above a significant multi-swing low support previously. This level at 63.49, right, was a multi-swing low support, with the first swing low taking place on 13th of November 2023, second swing low on 18th April last year, and the third one on 5th August 2024, right? So this was previously a very significant multi-swing low support, which naturally, of course, got taken out here, and now is likely to function as, or it did function as resistance last Friday, 14th of February, and after breaking higher today, this level now is likely to be a pullback support. So that's how the pivot has been identified. The pivot at 63.49 is a pullback support. So we could see the Aussie stabilize around the pivot before resuming to climb higher. Right, remember we've got the RBA coming up tomorrow, right? So despite making a rate cut, its first rate cut and since it stopped hiking about a year ago, right? Despite making a rate cut, right, we could actually see the Aussie maybe climb higher, right? Especially if the language in the statement and the press conference by Governor Bullock is going to convey a pretty neutral outlook, right? If it if it's going to highlight caution, right, with regards to future rate cuts, we could actually see the Aussie move higher. So take note, right? For now, right, as of today, we are seeing strong bullish momentum for the Aussie, making a break above a prior resistance. Now that level has been identified as the pivot at 63.49. It could stabilize around this level to resume the uptrend. And I see a nice overlap at 64.54, which has been identified as the first resistance, right? We can see this level here previously functioning as pretty decent swing low support on 15th of November, support again on 26th of November, and then after it broke lower, running the resistance here on 9th of December, creating a pretty decent overlap, which we can identify as the first resistance. Now let's see if there's any Fibonacci retracements that we can use, starting from this swing high on 30th of September, going down to the swing low on the 3rd of February. Let's take a look at all the fibs. Right, we can see that none of the retracement levels sit close to the resistance. That's fine, right? Don't force the Fibonacci retracements onto the analysis unless it aligns close to a predefined resistance or support level. Right, and in terms of support here, right, first support is identified as 62.31. We can see this gap down here that occurred on Monday, 10th of February. It is a level where the Aussie stabilized once more on Wednesday, 12th of February. This creates a pretty decent support level, helps us identify a pretty decent support level at 62.31. Right, and also price is the Aussie is trading within the red Ichimoku cloud, and any break through the Ichimoku cloud is likely to see further bullish upside as well. So take note of that. Alright, so these are the key levels for the Aussie. Let's move on over to the Kiwi. Right, similar story to the Kiwi as well, right? When you look at the market structure between the Aussie and the Kiwi, very similar market structure, series of lower highs, lower lows, and what was a prior descending or bearish channel, right? A significant bearish channel. We see a bullish breakout take place through the bearish channel, and if you extend the upper trend line of the channel, you can see that the Kiwi, similarly to the Aussie, found support just above the upper trend line of the bearish channel. So it's always important to take note of the upper trend line once a bullish breakout takes place, right? The bullish breakout took place on Monday, 20th of January, and typically we can should the momentum fail, right, should the bearish momentum fail and price falls, if it holds above the upper trend line once more, typically we can expect a nice reversal, and this is what has happened very nicely on Monday, 3rd of February. So we're going to replace the upper trend line of the bearish channel with this descending support line here. Right, now when I look across 55, 80, 80, I see a nice multi-swing low support, right, for the well, actually no, I would use this here, right? See a nice swing low here being formed in mid-Jan, and then another swing low being formed here on 3rd of February. So pretty strong multi-swing low support at 55.48. Now for the Kiwi, right, we can see previously this was a swing high resistance that was formed on 24th of January. Then we see resistance once more on 5th of February. And we saw a bullish breakout take place last Friday, 14th of February. Today, right, we see the Kiwi actually gap lower, but it rose very strongly to fill the gap. And what was a prior resistance, right, take note, 657.09 was a prior resistance. Now, after making a bullish break, this level could potentially function as a pullback support. So we can see here, as it gapped lower today, it managed to find support at pretty much 57.09 and has bounced strongly to close the gap and remains elevated. So just like the Kiwi as well, right, we could continue to see this currency pair grind higher, right, despite the RBNZ making a rate cut on Wednesday. And remember, the Kiwi is also going to be heavily influenced by the Aussie tomorrow, right? The RBA moves ahead with the monetary policy statement announcement, right? And any huge moves in the Aussie is going to have a similar impact on the Kiwi as well. So take note also of that. Okay, in terms of resistance, right, 57.98 is the first resistance for the Kiwi. Why is that? Right, we see a nice swing low being formed here in end of October, early November 2023, right? Market structure shows us a nice swing low, and we see a nice bounce take place again on 26th of November last year. And of course, once the bearish breakout takes place, what was a prior support, multi-swing low support can be a potential resistance. So that's how we've identified the first resistance at 57.98, and this is a pullback resistance level. Now, we can try to run a Fibonacci retracement from this swing high on 30th of September going down to the swing low on the 3rd of February. We can see that none of the retracement levels sit close to the first resistance, so that's fine. Don't force the Fibonacci retracement onto the analysis if it doesn't match up with resistance or predefined resistance or support level. Right, so these are the key levels here for the Kiwi. Let's see. Jay also wanted to have a look at dollar CAD, dollar franc, so we'll take a look at that, and then we'll move on over to gold and crude oil. Okay, so let's move on to dollar CAD. Right, the Ludi, right, the Ludi, the Canadian dollar is also known as the Ludi, right, it has strengthened significantly since the first week of February, and as the dollar CAD came crashing down, right, it breaking under 1.4200. It looks to have stabilized this morning at around 1.4150 and looks to be retracing higher. However, I feel any retracement to the upside is likely to be limited, and why I think there's going to be resistance. I see resistance at this pullback level here. Right, you can see that as markets reopen, dollar CAD gapped lower, right? Gapped lower, but it filled that gap very quickly. But I think any retracement to the upside is likely to run into resistance at 1.4279. This is a pullback resistance level. Now, we can also run a Fibonacci retracement on this downtrend here, right? Starting from this swing high on 3rd of February, going down to the low of last Friday. We can see that a 33.6% retracement sits pretty close to the pullback resistance. We can identify this as a resistance zone here. Now looking a little bit below, I see a nice overlap at 1.4105. I see a nice overlap at this level here. We see previously resistance being formed in mid-November, then resistance here as well in early December, and then once the bullish breakout took place on 6th of December, the following Monday, we saw support once more, and we saw price bounce off this level very strongly. So this creates a nice overlap, which we can identify as a pivot. So 1.4093 is actually an overlap support. That's accompanied by Fibonacci retracement at 50%. Now we found this retracement level starting from this swing low here on 25th of September, going up to the swing high on 3rd of February. Beyond the pivot, there's another nice overlap. There's another nice overlap at 1.3946. Right. Similarly, we see a swing high resistance being formed on 6th of August, then resistance a couple more times in early November, and then once the bullish breakout took place, you see a nice swing low being formed here on 21st of November. So we have another nice overlap at 1.3946, which we have used in the identification of the first support, and this is also an overlap that's accompanied by Fibonacci retracement at 61.8%. Right, so although dollar CAD has not dropped all the way down to the pivot, right, as it was falling sharp, as it fell sharply on Thursday and Friday, right, I was thinking it's going to move a little bit lower and to stabilize at this overlap level at 1.4093, but it looks to have stabilized today at around 1.4150. And should we see this retracement to the upside continue, I think it's going to run out of steam at the first resistance at 1.4279. Alright, so these are the key levels here for dollar CAD. Let's move on over to dollar franc, and then we'll touch on the commodities. Right, looking at dollar franc, right, dollar franc closed at around 89.96 last Friday. It gapped significantly lower to around 89.70, but it climbed very strongly to close the gap. But I think any retracement to the upside is going to be limited as well. In terms of support, right, as dollar franc fell sharply on Thursday and Friday, right, I had identified a nice overlap level at 89.16, which is the pivot. So I was expecting this currency pair to pull back a little bit more. However, it looks like it has stabilized at around 89.70 today. It looks to be retracing higher. Right, so the pivot at 89.16 is a nice overlap support that's accompanied by Fibonacci retracement at 38.2%. This retracement was found starting from this swing low on 6th of September, going up to the swing high on the 13th of January. Right. In terms of support beyond the pivot, there's another nice overlap at 87.52. Right. See a nice swing low being formed here on 11th of March, and I see a swing high resistance on 15th of August, resistance once more on 7th of November, and we see a nice swing low being formed here on 9th of December, creating a very significant overlap, which we can use in the identification of the first support. And we also see the 50% retracement sitting quite close to it as well. Right, and in terms of resistance, right, there's also a slightly closer resistance level here, right? I see a nice multi-swing high resistance at 91.43, right? We can take note of this resistance level as well. But the main key resistance that I see is at 92.12. This is a multi-swing high resistance that has been in place since September 2023, right? We see a significant swing high being formed in September and October of 2023. Another significant swing high being formed in April of last year. And you can even argue that on January, in mid-Jan, dollar franc came close to this level once more before running out of steam. Then again, at the beginning of February as well, it came very close to this major resistance before running out of steam once more. Right, so these are key levels here for dollar franc. Right, I think perhaps we could see the franc resume its downtrend here maybe today after gapping lower and filling the gap. Maybe towards the end of the day or by tomorrow we could see a resumption of the downtrend for the dollar franc. And take note as well, today, right, Monday 17th of February, US banks and financial markets are going to be closed in observance of President's Day, which is also known as Washington's birthday. So, right, so it's a bank holiday in the US. So once the European trading hours come to an end, we can expect trading activity and volume to drastically taper off. So do be aware of that, right? As the European markets come to a close, we can definitely expect much lower volume and activity for the remainder of the day. Alright, so this is dollar franc. Let's see. Okay, let's move on over to commodities, touching with gold. Right, touching with gold first, and then we'll move on over to XTI USD. Right, looking at gold, we can see that this precious metal has been in. Oh, how did this change? This precious metal has been in a strong uptrend since 18th of December, making its latest intraday all-time high on Tuesday, 11th of February, and that level is at $2,946.60 per ounce. No, $2,942.71 per ounce. That's where the intraday all-time high sits. And as gold prices reversed sharply on Friday, it managed to stabilize above the pivot. The pivot at $2,867 is an overlap support. Like we see previously, this level functioning as resistance on 6th of February, and then we see a nice bounce taking place on the 12th of February. So once again, gold has managed to stabilize above the pivot and looks to be climbing higher. Now this overlap support at $2,867 is also accompanied by Fibonacci retracement at 23.6%. And we can see a pretty strong support zone here. And a little bit below. Let's see this need to. Probably I would say, okay, no, not really. Okay, let's just keep 33.6. Right, you can see the 33.6% retracement aligned very well with the overlap support, which is the pivot. Now, beyond that, there's another nice overlap at 2,787. We have used this level in the identification of the first support. This was a significant swing high resistance taking place at the end of October last year. Then we see resistance being formed once more on 24th of Jan. And then once the bullish breakout took place on 31st of Jan, this level proceeded to function as support in February as well, 3rd of February. So this creates a nice overlap, which we can identify as the first support. Now, where gold made its intraday all-time high on Tuesday is also a resistance level that's identified by Fibonacci extension at 161%. To find this extension level, we ran a retracement we started retracement from this swing high on 31st of October, going down to the swing low on the 14th of November. We can see that the Fibonacci extension at 161% sits at $2,946. And it's a region where gold prices has run into resistance last week. Right, so with gold prices pushing higher, and with gold prices stabilizing above the pivot and looks to be pushing higher, right, identifying a potential take profit target at around $2,930 per ounce, right, is a suitable area to do so. So if there's anyone, if anyone has gone long on gold, perhaps as of this morning, right, as markets reopened and gapped higher, dropped down lower to fill the gap, but then started to bounce once more, right? So if you've gone long on gold, right, identifying your take profit target at around $2,920 per ounce would be a suitable area to do so, right? I see a strong resistance barrier here. Now, at the same time, I also see a very significant ascending trend line, right? This is a key ascending trend line that has been in place since 6th of January. So the intersection of the ascending trend line, the pivot, which is an overlap support, and the 23.6% Fibonacci retracement highlight a very important support zone. So if this level gives way, or if this zone gives way, then it's quite likely we could see gold prices pull back much more deeply. But for now, right, I think the momentum is to the upside, and I think any retracement towards this zone is likely to be a buying opportunity as well. And should we see price rise up towards $2,930 per ounce and $2,946, this is a major resistance barrier, and it will be a good suitable area to identify a potential take profit target for any long trades for gold. Alright, now let's move on over to crude oil. Right, XTI USD is an instrument that tracks the WTI crude oil futures, and we can see here that this commodity has been trading in a prolonged downtrend since mid-January. Right, it has hit the upper trend line of the bearish channel a couple of times and hit the lower trend line of the bearish channel a couple of times as well. Now, today, crude prices gapped a little bit higher, then dropped swiftly to close that gap. It filled it up very easily and then bounced higher once more, but looks to be under pressure again. So any retracements to the upside, right, is likely to be opportunity to go short on crude oil again, especially, right, if you see the pivot is an overlap resistance, right? The pivot is an overlap resistance at around $71.56, and also the intersection of the upper trend line of the bearish channel and the pivot is identifying a significant resistance barrier here. So should we see any retracements to the upside reach around $71.30, perhaps this is where we can identify a good entry, a potential entry for any short trades on crude oil, right? Or specifically for WTI oil, right? XTI USD is the instrument that tracks the WTI crude oil futures. Okay, beyond the pivot, there's another overlap at $74, right? I see an overlap here. Right, we see support being formed here previously at the end of January. Then we see resistance being formed in February, right? So this creates a pretty decent overlap, which is also accompanied by a Fibonacci retracement at, I believe, 38.2%. Let's adjust the labeling so we can maybe spot it a bit. It's a bit tough here. It's just embedded within the lost within the candles. Okay, nevertheless, this retracement level was found starting from this swing high on 15th of January, going down to the swing low of today. We can see that a 38.2% retracement aligns quite close to the overlap at $74.04, which has been identified as the first resistance. And remember, the intersection of the upper trend line of the bearish channel along with the pivot is a strong resistance zone. And should we see crude oil prices stall around this level once more, this is where we can identify a short opportunity for this commodity. Now, in terms of support, right, $66.66 is a very significant multi-swing low support, but this is actually quite a bit too far from where the price is currently trading, right? This is probably a level to keep an eye out should we see XTI USD drop even further. But for now, a support that I see that's a little bit more closer is this swing low that has taken place on 23rd of December, so the third week of December over Christmas. There's a nice swing low that was formed here. And this level is also accompanied by Fibonacci retracement, right? If I start a retracement from this swing low on 6th of December, going up to the swing high on the 15th of January, when I look at the 78.6% retracement, we can see that it sits pretty close to the swing low that was formed over Christmas, right? So, and you can see here today, as it gapped higher and dropped lower, it found support just above the 78.6% retracement to bounce once more. And any retracement to the upside here at around $71.40 may help us identify a better opportunity to go short on crude WTI oil. And should that bearish reversal actually play out, identify your take profit target in the support zone between $70.10 and $69.60 per barrel is a suitable area to do so, right? So take note, I would be looking for crude oil or WTI oil to rise up into this intersection between the pivot and the upper trend line of the bearish channel. And if price stalls around this zone, it helps us identify a potential short opportunity. And if that bearish reversal does materialize, we'll be targeting a take profit target that's identified by the 70, that's identified by a support zone between the 78.6% Fibonacci retracement and this swing low support at $69.62. All right, let's see what else. Okay, we've covered the dollar index, most of the major currency pairs, gold and oil as well. Is there anything else that you'd like to touch on? If not, then I can move on over to the indices, right? Any other instruments that you would like to see? All right, if not, then let's move on over to the indices. Let's start with DE40, right? DE40 is the instrument that tracks the DAX futures, and we can see this index has made a new intraday high, right? Its latest intraday high was formed today, Monday, 17th of February at around 2,721, right? I see it rising up towards, okay, take note, since it's trading close to its intraday all-time high, there's no other level that we can reference as resistance, right? We don't have a swing high resistance, we don't have a pullback or overlap that we can reference. So in such a scenario, we're going to have to rely on Fibonacci tools such as Fibonacci extensions and projections. In this case here, we've used a Fibonacci projection to help us identify the next resistance barriers. We've started this projection starting from point 1, swing low on 20th of December, going up to point 2, swing high on 31st of Jan, and ending on the swing low here on 3rd of February, point 3. And we have used the 78.6% Fibonacci projection as a potential pivot point and the 100% projection as the first resistance, right? So we can see a strong bullish uptrend for the DAX, and perhaps this is where it's going to stall this week, right? It may stall at around the 78.6% projection and make a small pullback. So if you've gone long on the DAX as of last week, or perhaps even from this morning, right, identifying your first take profit target at around the 78.6% projection level, which is at 22,809, is a suitable area to do so. Now, in terms of support, right, there's a nice overlap at 21,923. Right, you can see this level previously functioning as resistance on, previously functioning as resistance on 6th and 7th of February, and then when the bullish breakout took place on 11th of February, we can see the next day on the 12th, price stabilized above this level before resuming to bounce higher. Right, so 21,923 is a pretty significant overlap, right? That's used in the identification of the first support. Right, hi Ajay, yes, we can cover Nasdaq as well, right? Great. We'll cover it after this. And let's see anything else. Right, of course, we can see the DAX trading above the green Ichimoku cloud. Price is rising, the cloud is also rising, highlighting the strong bullish momentum for this index. Looking at the weekly, right, we can see, yep, it's been in a very strong uptrend. And coming back to the daily, I think, is there a channel or a, let me see if there's a channel or a, yep, And we got a pretty decent bullish channel for the DAX. Let's try to highlight it. Where we can see several touches to the lower trend line of the bullish channel and a couple of touches to the upside as well. So take note, right, the intersection of the upper trend line of the bullish channel and the pivot, which is the 17.6% Fibonacci projection, could be a potential resistance barrier. So identify and take profit target at around there for any long trades, right? Would be a suitable area to do so. All right, okay, let's see with all right, price is pulling back slightly, right? So maybe we can run a Fibonacci retracement from this swing low on 20th of December, going up to the recent all-time high that was formed today. And when we look at all the retracements, we can see 23.6% aligned pretty well with the first support. So let's keep that on. But at the same time, take note, should we see the DAX climb higher, if it breaks a new all-time high, this retracement is no longer going to be valid. So please remember to remove it from the analysis if we see the DAX make a new all-time high later today. As of now, the most recent intraday all-time high is at 22,721.70. It's currently, the DAX is pulling away from this level now. So that means this retracement is still valid and we can use the 23.6% level. However, if you see price climb higher, making a new intraday all-time high, take note of deleting this retracement from the analysis. All right, now let's move on over to NASDAQ. All right, so that's the US Tech. US Tech 100 is the instrument that tracks the NASDAQ futures. And we can see that it's actually trading close to the prior all-time high, or it's actually broken above, right? Are we going to see oops, what is it? Right, are we going to see this index make a pullback, right? Remember, US markets are not going to be trading today, right? Futures will be trading, but the indices and the stock exchanges will not be trading today, right? The stock exchanges will be closed and the indices will not be trading, but the futures will be. So perhaps we're going to see a reversal for US Tech, right? It is trading close to the prior swing high resistance, right? This was previously a swing high resistance, and then we saw it hit this level pretty much exactly last Friday. It has gapped higher today, right? We can look at it here. We see Nasdaq gapping higher today, the futures gapping higher, dropping lower to fill the gap. Let me see if we can see it a bit more closer here. Let's see when the markets open today. Let's see, today's markets closed. Oh, there we go. Yeah, markets closed at 22,120 last Friday. It gapped higher to open around 22,143. It looks to fill that gap very nicely and bounced higher. Right, so since the gap has been closed, right, and price has managed to stabilize, I think this pivot is likely to now function as a sort of pullback level here, right? Pullback support level. So we could actually see this index climb higher this week. So take note, right? A bullish gap has taken place earlier today as markets reopened, but that gap was filled, and price looks to remain elevated. Right. So should we see the once US markets resume trading tomorrow, right? US markets will resume trading tomorrow. Perhaps we are going to see further continuation of the major indices, and that could potentially mean US Tech, which is the Nasdaq index, is going to probably stabilize at around the pivot at 22,101 and probably resume the uptrend. Right. In terms of support, there is a nice multi-swing low support that has been in place at 20,710. This swing low support has been in place since Friday, 20th of December, right? We can see US Tech bouncing off this level several times, right? Very significant support level at 20,710. Right, so these are the key levels here for US tech, right? If it manages to stay above and around the pivot, right, we may see this index climb higher. But remember, take note, US markets are going to be closed today. Futures will be trading, but perhaps maybe this would be a better opportunity tomorrow, right? US tech. So reevaluate this index tomorrow, as we will have more liquidity on Tuesday, 18th of February. All right, okay. Let's see if there's anything else to cover. And we can touch on Bitcoin as well, right? Okay, let's move on over to Bitcoin. Right, we can see that after making its latest intraday high, all-time high on Monday, 20th of Jan, that was at $109,547. We can see that this crypto coin, has continued to move lower, right? We see it trade underneath this descending trend line with a pretty decent descending trend line, and it is looking to drop towards a significant overlap at 91,855, right? You can see here this is a significant overlap level. We see resistance previously being formed in mid-November. Then we see support several times, very significant swing lows being formed along the way, with the most recent one on Monday, 3rd of February. So this creates a very significant overlap, which I have identified as the pivot. So expecting Bitcoin to drift towards the pivot here. So anyone who has been shorting Bitcoin, right, you can identify a potential take profit target close to the pivot, which is at 91,855. So probably around $92,000, right? Around that region would be a suitable area, especially if we see Bitcoin continue to slide lower, and at the same time it continues to remain under this descending trend line. We have a pretty decent descending trend line, so take note of that. As long as it remains constrained within this zone, right, within this zone here, right, take note where you can identify a nice where you can identify a potential take profit target for any short trades for Bitcoin would be at around the pivot, so probably around 92,000. Now higher up, I see a pretty decent overlap at $101,637, right? You can see this overlap was previously a swing high resistance, and then support a couple of times, and then resistance again. So creating a pretty decent overlap at $101,637, which we have used in the identification of the first resistance. And also this overlap is accompanied by a Fibonacci retracement at 61.8%. We found this retracement, or this we found this level by running a retracement from, by running a Fibonacci retracement from this swing high on 20th of Jan, going down to the swing low on the 3rd of February. You can see the 61.8% retracement sits pretty close to the overlap. Now, for support, right? First support at 87,933 is a pretty decent overlap, but it's not the strongest level, right? You can see price consolidating around 88,000 in mid-November. However, this is a pretty decent support level, right? It may not be the strongest support, but for now, right, it looks to be one that may be quite useful as well. However, beyond 88,000, right, the next major support for Bitcoin actually comes in at this pullback level here. There's a very significant pullback at $73,176. Right, we can see here, previously this was a very significant resistance barrier, right, multi-swing high resistance all the way till 30th of October 2024, and then finally when the bullish breakout took place on 6th of November, this level is now potentially a pullback support. So that's how we've identified the second support at 73,176. This is a pullback level, and first support is this overlap here at 87,933. Now, let's see. I think I'm going to run a retracement from this swing low on 13th of January going up to swing high on the 20th of Jan. The purpose of running this retracement is to look for extension levels. Key extension levels set at 127 and 161%. But for now, you can see they're pretty much in no man's land, so that's fine. Let's not use these retracements, or these extensions, sorry. Let's get rid of it. And we can see Bitcoin continuing to slide lower. Alright, okay, let's see if there's anything else. Right, before I proceed, I'm going to launch a poll as well Really appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll continue the session with any final requests that you may have. All right, thanks Ajay. Thanks so much for the kind words. Truly appreciate it. All right, since we've got a little bit of time, right, is there any other instrument that you would like to see? Right, we've covered the dollar index, a few of the major currency pairs. We've covered the commodities such as gold and oil. We've looked at the indices. We've looked at the DAX, the Nasdaq 100, as well as looking at Bitcoin. If there's anything else to take a look at, please do let me know. And at the same time, thank you everyone for the great responses. Right, truly appreciate this as well. And yeah, don't forget to smash the like button on the YouTube page as well. All right. Oh, okay. So, Ajay, are you asking for coffee futures? Are you asking for coffee futures? I guess okay. Right, we can take a look at that commodity as well. Of course, let's take a look. Coffee futures. There we go. KC, right? KC1 is a coffee futures, right? So let's start on the daily. Wow, we can see coffee has really. I think I remember reading something about coffee and eggs, right? The prices of eggs and coffee rising significantly, right? A huge spike in prices over the last few weeks, and especially for coffee as well. So let's look at it on a weekly time frame first. Right, I think just to confirm that it is trading close to all-time highs, right? If you look at it, if you zoom out on a weekly, yep, it has just made its latest intraday high at around $430. Let's come back to the daily time frame. Right, so this is this level here, $429.95 is the latest intraday all-time high, right? And of course, I can see a nice resistance being identified by the body of the candle here on Tuesday 11th of February and Thursday 13th. So this is where I would identify the first resistance for coffee, and it looks to be rejected of this level quite strongly today as well. Oh wait, on Friday. Okay. Oh yeah, because I thought futures would be trading today. Let me think. Okay, I'm not too sure. I would have thought that futures would be trading in the US. Okay, so nevertheless, let's just identify the key resistance and support levels, right? We can see resistance very clearly at around $425. What about support? There's a big gap here as well. It's occurred on the first week of February. I think this is where we can identify the first support, right? The gap here, and today as well, it looks to have stabilized just above $397. Now, on this uptrend here, there's I believe we can run a Fibonacci retracement from this swing low on 1st of November going up to the intraday all-time high. Let's take a look at all the fibs. Right, 23%, 23.6% is pretty far from the first support, and we can see very clearly from about $338, there's no real major support that we can identify. Maybe there's another gap here, and perhaps there's another gap here as well, and perhaps where the 23.6% retracement sits, there's a pretty decent overlap at $380, which we can identify as the second support. And let's keep 23.6% and identify this as a zone here. Right, beyond the first resistance, right, how can we identify the next potential resistance? Let's see, let's go to the weekly. Right, maybe there's a retracement and we can run from this swing high on 7th of February 2022 going down to the swing low here I believe these extension levels would have been exceeded. Yep, all these extension levels have been exceeded. Let me see. Projection. Can we do a projection? Even all these projections have been exceeded as well. Okay, that's fine. I think we can probably run a projection on this uptrend here, right? Starting from this low on 28th of October, going up to this high here on 30th of December and stopping here as well. Okay, we can already see 100% projection has also been surpassed. It's getting a bit tricky, right? Let's see on the daily. There's something we can identify on the daily. No, it's a bit tough to identify the next resistance for coffee beyond $430. Let me see on the 4-hour time frame. Right, if anything, it seems like I would. Yeah, if anything, I think I would use a retracement from this swing high on 13th of February going down to the swing low here on the 14th using the 161% extension. I think this is where we can identify the second resistance here at around $440. Right, it's a bit, you can see here in this case for coffee, a little bit difficult to identify the second resistance, right? Not so obvious, but I think perhaps this retracement here that has begun from last Thursday could be a pretty good retracement to use to find the extension at 161%. Alright, so these are the key levels here for coffee. Right, it looks to have bounced off a nice overlap at $397. And looking at the 4-hour time frame, right, you can see it has bounced off this overlap quite nicely. And perhaps you could see it make an attempt to climb towards the first resistance once more. Alright, so that's all I've got for you guys today. Alright, thanks everyone for tuning in to today's live analysis session brought to you by IC Markets. Do look out for all upcoming webinars for the rest of the week. Right, we got a combination of live analysis and educational topics in English, Thai, and Bahasa. So do look out for all of that. And of course, please take note, right, it's a very heavy calendar. We've got a huge range of macroeconomic data, right, from central bank announcements to retail sales, inflation, and PMI data as well PMI reports, as well as employment reports. So, but of course, take note of the RBA. They're going to release their monetary policy statement on Tuesday, tomorrow, 18th of February at 3:30 a.m. They're very likely to make a 25 basis points reduction in the cash rate. However, take note, the statement, the wordings of the statement, and the press conference by Governor Michelle Bullock will be key as well. If they convey a very neutral outlook with regards to future monetary policy action, and we can probably expect the Aussie to remain supported, right? We may not see it drop as much as we expected, especially if the language shows caution with regards to future monetary policy action or with regards to future rate cuts. Similarly, for the RB and Z, they will release their statement on Wednesday, 19th of February, followed by the press conference by Governor Adrian Orr. The RB and Z is expected to make a much larger reduction, reducing the official cash rate by 50 basis points. But similarly, the statement and the press conference are going to be key, right? The direction and guidance from these two events will likely dictate the price action for the Kiwi, right? Especially if they show a bit more caution with regards to future rate cuts, we could see the Kiwi being supported as well, similarly to the Aussie. And then we've got inflation data out of Canada. On Tuesday, we also have inflation data out of the UK. On Wednesday, we have the Fed meeting minutes being released at 7 p.m. GMT time, Wednesday, 19th of February. We have labor market data from Australia on Thursday, and we have retail sales for the UK and Canada on Friday, and then we have a whole barrage of flash manufacturing and services PMI data. So flash reports are basically estimates, the first estimates for manufacturing and services for Germany, France, the wider Euro area, for the UK, and for the US as well. right? So take note, it's a very heavy calendar. Do watch out for all these macroeconomic events because they're definitely going to have a huge impact on the respective currency pairs. All right, thanks everyone for tuning in to today's session brought to you by IC Markets, and I wish you all the best in your trading journey and looking forward to seeing all of you at the next session. Right, thanks everyone, take care.